With the Investing News Network, I'm Scott Tibbles. Today I'm here at the Vancouver Resource Investment Conference, and joining me now is Ross Beaty. You all know him. He's the chairman of Pan American Silver and Equinox Gold, two of the better-known companies. Thank you so much for joining me, Ross.
My pleasure, Scott.
So, first things first, something that listeners will be the most interested in is the upcoming merger between Equinox Gold and Leagold Mining. Can you tell me a little bit about what's going on there? I know that there is a meeting on January 28th. Is the merger looking like a sure thing?
Yeah, it definitely is looking like a sure thing for a number of reasons. We announced the deal on the 16th of December. It was a merger of equals. It was one that I was going to put another $40 million into. We had $500 million of bank debt organized. Mubadala, a big fund in Abu Dhabi, is going to put another $130 million into it. So we raised $670 million US in new capital to this company post-merger. And so let's just say that since December 16th, the stock's up 30%. Leagold itself has 50% of its shareholders locked up to the deal. So I would say the odds of it not happening are zero. And I wouldn't normally say that kind of thing, but no, it's 100% sure. It's a really great fit. It's a logical kind of a merger. A lot of synergies, a very organic fit of management, of board, of assets. I mean, it really makes sense, and that's why the market's gone up. And it delivers that which the market wants these days, which is scale. It gives us a company that's going to be producing about 1 million ounces of gold sometime late next year. And with that, we'll have huge liquidity. We'll be in all of the big indexes to offer ETF buying from those big pools of capital. And that's where the market is today. It's almost a custom created vehicle for that market, delivers massive leverage to gold. It just ticks off all those boxes. We have to execute, of course. That's where management comes in. And I have great confidence in the management team. That won't be me. That'll be the management team that does that. But they're really smart people. And I'm very confident they're going to execute well. And we're going to demonstrate to the market that this has even more potential than it's already been given credit for.
And so you're going to be the chairman of the new company, is that correct? Okay. And so you spoke a little bit earlier today at a fireside chat about Leagold Mining. Can you tell me just a little bit why Leagold Mining? You've just mentioned now that it seemed like a logical fit. Sure.
I mean, it was like a twin company almost. It was doing that which we were doing, maybe a little bit bigger in some respects, in some respects a little bit smaller. It was an opportunity to combine one and one and make three. Really logically, it was an organic merger. Leagold has a big gold asset in Mexico. It's very similar to the two that we have in California, big low-grade heap leach mines. It has 3 mines in Brazil. We have 1 in Brazil. I mean, it just was a really good fit. They wanted to go big. We wanted to go big. It just makes money for both sets of shareholders. It increases our multiples, right? We were trading at about 0.6 times net asset value. They were about the same, and now we're trading at about 1 times their net asset value. So as you build these things in scale, you just create wealth per se.
Okay, and so in previous interviews, executives from Equinox have talked about the million ounce a year target. That's not the end game, I'm assuming. There's still more growth there.
Right. It's just a number. I mean, all it does is represent scale. And so, you know, once we bet all this stuff down, we've got a ton of operational work to do. We've got to double the size of the Mexican mine. We've got to build a new mine in Brazil. Complete construction of our mine in the United States right now. So there's a lot of things we have to do to get there. I'm confident we're going to get there. You know, who knows if this is the last deal we do? Probably not. We're a reasonably deal-friendly company, and until the model is broken, that scale creates wealth by itself. You want to just keep getting bigger. There is a limit to that ultimately. There's a limit to the number of mines you can sensibly run and manage well. I think Barrick way overshot that, and then they've pulled back a lot. Newmont overshot and have pulled back, and they've sold some of these non-core assets. We'll probably do the same thing. We won't own everything we own today in 3 years. But will we continue to grow? Probably, not certainly.
Okay, and so of course the merger is the big thing happening now, and you're saying that that'll probably close sometime early
It goes
this
in
year?
February.
February?
Yeah.
Okay. And you mentioned that it would take about 6 months to smooth things out and
Yep.
make sure everything goes well. Besides the merger, what do investors have to look forward to with Equinox Gold? I guess developments with mines?
The usual.
Yeah.
Exposure to gold. I'm bullish on gold, so as gold runs, the stock will do better. Exploration success, good mine management, strong financials. Just the usual stuff.
Yeah.
Just how you build successful companies. My model for Equinox is Pan American Silver. It's done really, really well. It's a household name now in the silver industry worldwide, and I'd love to do that in the gold business with Equinox.
Okay, and now that you've mentioned Pan American Silver, let's switch over to that. Obviously, a silver-focused company. What can you tell me about updates there? How's it going with the silver price?
Well, silver, Pan American Silver had its best year ever last year. Its stock is trading now where it traded in 2011 when the silver price was $30 an ounce. So we have huge exposure to silver, huge exposure to gold. 3 big assets that have option value. One in Argentina, Navidad, that could be a 16 to 20 million ounce silver producer when it's permitted and developed. We have a massive deposit in Guatemala that we acquired with Tahoe's deal last year, which is ready to start operations again. We've got to have social license work done this year, next year, who knows, but we think quite soon it'll be back in production at about 20 million ounces a year, not bad. And then we have a huge discovery we made in Mexico at the La Colorada mine that's one of the world's biggest new discoveries of lead, zinc, and silver. So each of those 3 assets has a couple of $1 billion of value once we make them happen, and that gives us this tremendous option value on top of the fundamental value that we'll have by producing. I think this year we're producing about 650,000 ounces of gold and close to 30 million ounces of silver and a lot of lead, zinc, and copper. So it's just a great earnings engine, big dividend, and all the stuff that makes people money.
And looking at gold and silver prices, what are your thoughts on where they could go this year? Obviously, 2019 was a bit of an up and down year. What are you thinking for 2020?
It was an up year. It was a pretty good year for gold and good year for silver. And I see more of the same this year. I'm very bullish on the gold market. I see, quite frankly, better macro fundamentals, Scott, than I've seen in my career right now, which favor higher gold prices. And with higher gold prices will come higher silver prices.
Okay, and given that, so you're bullish on the prices, what do you make of investor sentiment in 2020? Has it improved?
It'll improve. It'll improve. People are making money right now on the large cap stocks, and that'll filter down into the juniors ultimately, and they'll make more money as the gold price rises. So it's going to be, I think, a pretty good bull market, and you're going to see that filter through quite a few companies here at this show.
Okay, and so going macro with world news, I guess looking into the crystal ball, what do you think is going to be the big story of 2020 that's going to affect the resources industry? Is it going to be trade wars? Is it going to be election? Is it going to be the unrest in the Middle East?
Yeah, well, a lot of people would say it's going to be the election, but actually the U.S. is not that important in most metals today. It's China. China's the important country. It consumes half the world's copper, most of the world's iron ore, coal, that kind of stuff. So China is super important. What happens in China is what really you have to look at. But the U.S. is important for gold and gold and silver. And so I'll be looking at all these places. I'm sure that there will be hiccups and bumps and some sort of black swan in 2020. It could even go into the major markets, which are really almost running out of air. The asset bubbles in the stock market, the bond market, are being pushed by the tax reform, printing of money, constant QE all over the world. More and more paper is being generated, and that has some psychological effect that causes a pop in those markets. That balloon's going to burst sometime. It might be this year, it might be next year, who knows? It's not going to be in 10 years. These markets have run out of air. And gold will be a beneficiary, and silver. So I would say a lot of the base metals might be struggling. The precious metals should do pretty well. And it may be that major markets continue to go for another year or two, but there will be a chunk of money, a small amount of money that's in those big markets that's going to exit those markets looking for a home and some form of insurance, and that's where the gold market really is the place that some of that money goes. Gold equities, gold ETFs, physical gold. That's, I think, going to be, so I can see 2020 it could be a year that sort of everything does well, much like it did in 2019. But if the major markets crack, I think you're going to see gold doing really well and the other metals not doing so well.
Okay, with all that together and just wrapping up, what would you say would be your top tips for investors in 2020? How can they play the market?
Yeah, so investors should look to a diversified portfolio. You know, they should hold some larger caps companies like Equinox and Pan American maybe, and other companies like that. And I think right now is a really interesting opportunity to look down market into some of the juniors. You know, I have a company called Leagold. You know, it's cheap as borscht. I mean, we've got 17 million ounces. It's a big deposit in Ecuador, ready to go. We've done a very positive preliminary economic assessment on it. We've de-risked it. We're going to sell it this year if we can. I mean, that's the kind of company that people should be looking at because it's super cheap and it's fundamentally good. And there's a whole handful of those around. There's a bunch at this show where you're going to see a pretty good capital gain coming in 2020. With or without higher gold prices, but if we also get higher gold prices, those are the companies that could really run this year the way the sort of intermediates and senior companies ran last year. The market will go down market into the smaller companies, and it's companies like Leagold that'll do really well.
Fantastic. Well, I think I will leave it there. Thank you so much for joining me, Ross.
My pleasure, Scott. Thank you.
And again, I'm Scott Tibbles with the Investing News Network, and I've been speaking with Ross Beaty, Chairman of Pan American Silver, Equinox Gold, and a few more as well.